Thanks for tuning in to Talking Point Unfiltered. And tell you what, with the markets the way they have been in the last couple of months, the conversation has to be unfiltered. But I'm duly glad to be doing this conversation with somebody who I can truly have an unfiltered conversation with. Our guest today is Vikas Khemani of Carnelian, a very, very dear friend and a brilliant mind, more importantly. And Vikas, so good to be talking to you today. Thanks for agreeing to do this.
No, it's my pleasure, and it's always great to chat with you, Neeraj.
Yeah, but Vikas, a lot of people in the markets. I mean, there are two memes which are the most famous. Donald Trump has taken over right now, but otherwise, के market में सुबह उठो, खाओ पियो, धो जाओ और शाम को घर पे जाओ was the mantra for the last 2 months. Have been very rough. Is this unlike what you may have seen in the recent past or in the last few years, or have you seen this tape play multiple times?
No, I mean, if you sort of take your time horizon longer, 20 years you've seen it multiple times. But I think this kind of correction we've not seen for at least last 2-3 years. The only period again which reminds we forget very often is that 22 was also similar period. 21 was a great year, and Nifty had touched almost 18,500, and then Ukraine war had started. And if that time every day, geopolitical, inflation, oil price, and I'm sure, with the initial reaction that 2 weeks war will be over, and then it kept getting extended, and most people ended up giving up. And that, by the way, the first half of 22 also was very rough. So time and again these kind of situations come. I feel that these are not reasons will come, but these are, in my opinion, natural cleansing process, correction process, whatever you want to call it, or bringing down to the levels or normalization process. Every 2-3 years you see some sort of correction. Now whether it will degenerate into a big one or not, that only time can tell you, because given the fact that there are uncertainties around Mr. Trump and all what he does, who knows. But my own view is that I think this is not a big one. I think it'll probably settle somewhere here. Like Ukraine war looked very big. In fact, I remember some point in time people started talking about it can lead to world war kind of thing. I mean, there were all kind of conversation was happening, right? So in the negative times, people tend to pronounce or extrapolate more negativity. In positive time, positivity is more pronounced, and that is the normal human psychology of moving between fear and euphoria, and that's what it is.
Yeah, I mean, the sentiment was very low, right? Somebody from Nuama was pointing out that some 86% of the stocks below some 200-day moving average, etc., not seen such times. But is this because of growth issues in India as well, or is this got to do with tariff tantrum? Because I was talking to we had a conclave and I was talking to Rhythm Desai and I was asking him, FIs वापस कब आएंगे? 5 straight months of incessant outflows, right? And he was saying that his view was that this is a growth issue of India which will resolve itself once growth come back. And then, sorry to extend this question, but my mind took me back to a clip of yours जो बहुत viral हुआ था, जहाँ पे you spent 5 minutes explaining how India is almost like a Teflon coating, कि CAD हो गया ठीक, growth ठीक है, politics ठीक है, कहाँ पे और ये सब combination है, and therefore we will probably not see too many tumultuous periods. Do you still stick by that?
No, absolutely. The point I made that point in time was there are no structural issues in India.
Right, agree.
There are no, I didn't say that growth will not temporarily slow down, right?
Yeah.
There are no structural issue. Our big structural issue comes from current account deficit, fiscal deficit, weak banking system, inability to manage inflation, excessive leverage. None of them are there right now today in economy, and we think they are addressed also in a reasonable good way. But there will be along the way journey, like why to growth slow down. If you see last year, RBI had tightened liquidity in the system beyond measure in order to defend rupee. RBI sucked out liquidity, and we were, for a large part of the year, we were running 3.5 lakhs rupees kind of negative systemic deficit. And then we had that clamp down on the unsecured loan, and it got coupled with governments, because of elections, slow down in the government spending, release of payment by the government. So you have suddenly, in a very short period of 2 quarters, you had squeeze on the liquidity. And liquidity is like blood in the body. If you squeeze blood out, obviously you will feel weak. So that played in the corporate earnings with 2 quarters of lag. Now, if you fast forward today, if you see both policies are pivoted, right? RBI is now pumping liquidity back into the system. They have, stopped defending rupee beyond requirements. Unsecured loan weightage has gone down. NBFC weightage is down. RBI has put more accommodative stance. Government has started spending. Government's, the release of the increase of tax limit of 12 lakhs rupees is a very big measure. So I think if you see, all those things will start impacting with a 2 quarters lag.
Okay.
So both ways it does same way, right? So I believe that growth story will get addressed more or less in a quarter or two. I think 15-16% earning growth of India is not in question according to me. It's not
challenging. You don't think that's FY26? Yeah. You think 15% growth might happen?
I think so. I don't see much risk to that.
Okay, just one quick follow up there, right? A lot of people said that chalo December se
and remember this conversation and play that video in 26.
Agree completely. Agree completely. No. But hence the idea of talking to you, right? Because you somehow in a lot of your tweets or our conversations that we have, right? You have this deep passion for the country itself. It comes out in your tweets per se. And therefore, I try to corroborate that कि भाई आपका passion for India, is it coming in the way of your judgment about earnings?
बेटा है कि खाली patriotism है. एक पूछ रहे हो ना भाई. See, पैसा patriotism से नहीं बनता है. Right? Of course, I am a patriotic. I am a hugely nationalist at the core. But also, I run a family, I run business. I have clients to address. So never confuse two things beyond a point, right? I might be patriotic. I am patriotic. I am nationalist. But money will not be made by that. My business will not survive on that. So I have to do justice to what I do, right? So let's never confuse on that.
No, in a good way, I'm saying that I believe that I'm a shark, you are a bigger shark. In a good way, I'm saying that. It's a compliment.
Absolutely fine.
From a market's perspective, it's a compliment. So, okay. So, just a quick word. I know you look at long term now in a big way. In the last 5-6 years, you look at very long structural stories. But just to focus on the short term, there's a lot of question marks around growth. Q2 ke end mein, even Q3 6.2, okay, nothing too great. But capex rebound a little bit in December, government capex, etc. Jan conversation was okay. In your conversations with your private investee companies or your fund investee companies, do you sense that the optimism is back, whether on capex or on growth or on both?
No, see, it is not a switch. It's a dial, right? Like it changed other way around last year. Like I said, everything moves with the 2 quarter gap. Okay. See, liquidity ka answer is nothing, but liquidity. It's like,
that's true.
Right? So, like we took out last year, why the interest rate went up? RBI did not increase interest because there was no liquidity in the system. Deposit growth was not happening for the banks, right? Today, with 12 lakhs rupees minimum, no tax, your post-tax returns become 8.5%, which is a great money for very wide middle class. So you will start seeing deposit flow back. So I think these pivots we are ignoring. These pivots both on the liquidity, a dovish commentary by regulator clearly tells you that we have shifted from risks to growth. Government is clearly moving to growth. So I think all those things it's like I said, it's not a switch, it's dial. So as you will start seeing people, and people feel more with numbers. As numbers come out, as markets do well, we will feel more and more confident. It is a human psychology.
Yeah, that's true. Actually, 2 days ago, Vikas, I put out a tweet as well, wherein I said that when this tide eventually turns and people look back, people will realize what a crucial role the Reserve Bank of India has played in the last month and a half, right? The measures that they've taken, not too many people anticipated it. People were talking about it, but not many people anticipated one after the other kind of moves that they're kind of pretty strong, right?
In a good bull market, and if the sentiments were good, this would be cheered beyond measure. Yeah. In a bad sentiment, markets have ignored it. Yes. That's a beauty that is giving you opportunity to buy in a great developments and giving the right price to buy. But markets are saying, okay, big deal. But if you understand the meaning of these macro changes, these pivots tend to people will say, okay, pivots kiya, but what happened? Nothing has improved. It does not happen automatically. Immediately. It takes 2 quarters lag. So it will happen.
It will happen. Okay.
Unless something goes wrong globally and, which is, some major chaos happen. Big risk comes from obviously right now from US that we do not know.
Yeah. Are you worried about the tariffs and the impact it could have on selective growth or sectoral specific growth?
See, sectoral can happen. We don't know. You don't know. But see, a big thing about here is that if Trump is going to put tariffs on everybody, then everybody is at par. But I think the real battle US has is with China, not with India. India is either a collateral damage, or it probably politically he has to keep making noise so that he does not seem to be favoring India. In my opinion, I think India will come out a better way, because see, there will be some deal made. You import LNG, we will do this, and India anyway has to import energy. So I'm sure there will be some deal made in next 2-3 months. It will all settle down. I don't think India, given India-US relationship strategic importance, and given the US and China, how China has reacted to this, there's no easy answer to that. So I don't think net India will be major negatively impacted. But some sectoral here and there can happen. Who knows?
Yeah. So is this the market that invites you to really put money to work, Vikas?
See, yes, in my opinion, like I said, Ukraine war, Nifty came down from 18,500 to 15,500, almost 20% correction. Look at what happened after June 22. Second half of 22 was good. 23 was great. First half of 24 was great, right? Same way now, Nifty came down from 26,500 to 22,000, right? So almost 18-20% correction. Very similar kind of situation. I think second half of this year will be far better than first half. Now, whether it turns in April, May, June, who knows? I don't know, at least.
Yeah.
But I tend to believe the risk reward of investing, committing money from here is favorable. 80-90% of the damage is done. Last 10%, nobody can tell you when it will happen, both in terms of time and value. Nobody can precisely predict. So risk rewards are turning favorable. I think if you have to allocate money, you have to put money over next 1 to 3 months. Next 3-4 months, I think is a great time.
सब लोग बोल रहे हैं large caps में डालो.
I think I personally am not a big believer of large cap, mid cap, small cap. I am a believer because for a long term investor, caps don't matter. What matters is the market cap, matters the management and the business model, right? And your ability to withstand, in mid and small cap, the volatility risk is very high.
Yes.
But, I always say that if I like a management and a business, I would rather buy it small than buying, right? That's a very simple, right? So large cap, the people who say large cap, mid cap mein dalo, they come from the managing volatility perspective. They come from the short-term perspective. People who have 5-10 year horizon, they know that big money is made in mid and small cap. I'm not saying large cap money banta hai. I'm not making that point. The big, beat or the supernormal return, if let's say large cap or index is going to give 15%, you can make 25% return also by investing into mid and small cap over a long period of time. Right? That's possible. So again, you choose what kind of the risk appetite you have for the volatility risk, and then you invest.
Have you done that right now?
No.
Chosen mid caps, small caps right now in the last 1 month?
Nothing has changed in our investment.
नहीं, वो तो आपका पहले वाला investment रहा. But if you had incremental money, have you put it to work in mid caps and small caps?
See, we have multiple strategies. We have multi-cap strategies. We have small cap strategies. Yeah, mid also. So we do based on whatever mandate of the strategy.
Okay.
It's not like we are deviating significantly here and there. There are mid caps which are finding interesting. There are large caps we are finding interesting. In fact, we recently during the Ukraine war time, we had launched a contra portfolio strategy, right? That strategy, we said we'll beat, because that time nobody was ready to listen. So we said we'll beat inflation by the fixed income by 2-3%. So it guided for 12-13% kind of returns. And that strategy has delivered almost close to 36% return in the last 3 years. We had closed for subscription. Now we opened it again because we think it's a time to get money back in that. Now, whether it will give 15 or 20, I don't know. But the fact is that right now risk reward is finding favor, and hence we opened it. So that tells you, but that's a largely large cap strategy. 60-70% large cap, balance mid and small cap. Again, their philosophy is, so I am more guided by the approach philosophy rather than cap. We have made 5x return in large cap also. We made 5x return in small caps as well.
Maybe the other reason why I asked this question was that I remember a newsletter that you guys wrote at the start of the year, maybe, that this is a year not for hitting sixes. I mean, not paraphrasing it, but capital conservation will be as important as well, which is why my question.
So no, we said that, keep the expectations low from this year.
And you're still keeping it low?
Yeah, we're keeping it. See, anyway, in general, we should keep in life expectations low. But we were like, since we are in a business, we have to keep, give all kind of views. So I think this year will be a, challenging year. It will be a difficult year. We expected that to be. Now, uh, that is true for large cap, that is true for mid and small cap. Mid and small cap tend to take more beating in a bad market, but they tend to also run up very fast in a good market. If you go back and check 22 May, when recovery happened, it was far more sharper in mid and small cap. Than large cap. So that's the nature. So again, we are saying that hold on your nerves, don't panic. Nothing is wrong with India. Environment settles down, equity will create wealth. I see similar to 22 kind of situations, and that is your call.
Well, this should be soothing for a lot of people, because I'm still wanting to understand from you, because you talk to a lot of companies. I know that, right? Both on the private side and the listed side as well, presumably. What are corporate conversations like? Are promoters slightly shaken because of the lack of growth? Are they telling you that no, they are confident about FY26? What have you? Tell us a bit about the feedback you're getting from them.
Depending on the sector to sector, company to company.
But broadly,
I'm telling you, banking, no problem. People are reasonably positive, and growth is there, and the recent whatever is happening, I think reasonably positive. Capex sector, I think order books are very, very strong. They're executing well. I don't think anybody is expressing any sign of worry, if you ask me. Pharmaceutical business are going reasonably well. Some part of uncertainty is there on the US front, but you don't know. In fact, that they account for 45% of the US medical market. I don't think if it happens, it will be passed on. And, so I don't think there will be any challenge on that. So consumption side, again, mixed bag depending on what size of the company you are and, what sector you are. But we have few names where things are doing pretty well. So I think the worries are coming in some pockets where there is a little bit of international trade where they don't know what's happening. So whether what to do and what not to do, how the things will pan out. Like yesterday I met some auto component company. They export to Mexico, and Mexico does some work on that and goes to Tesla in US. Now he was saying, I don't know how it will pan out. And like he said, I sent to something to Canada, and Canada say it comes to Detroit, it gets machined and goes back to Canada, gets some work done, goes back to Detroit. And say, I don't know how that business will play out. And that's like 25% of my business. So I don't know. So wherever uncertainty is there, they are kind of dealing with this whole uncertain period. We don't know. And obviously that's right. So all those things should settle in next 3-4 months. But generally speaking, I have not heard companies saying that, oh my God, it's like we are kind of canceling our growth plans and curtailing it down. None of those things. I think, people saying that this can be challenging year, challenging environment will come out. So there's nothing which at least we have heard negative from corporates.
Very nice. The other question, Vikas, that I have is on what could happen to jobs creation if indeed AI, which is the big buzzword, I mean, it was the biggest buzzword in Davos this year. Everybody was talking about one thing, even though it was Donald Trump presidency, and that was AI. Now my question is, if AI is increasing efficiency, reducing need for duplication of jobs, what have you, and if it is negative for global capability centers being set up across the world and India, for IT sector, etc., is India sitting on a worry when it regards to jobs versus availability of labor?
So again, it's a very interesting and a very common question which comes all the time, and I have my favorite answer on that.
Which is?
So basically AI, I think there's a lot more, I'm not saying AI is not going to change the world. It is going to change the world, it's going to change the world fast. But I think there's a lot more fear than the reality. I'll tell you why. AI is nothing but similar to like internet. 15 years ago, we didn't have WhatsApp, we didn't have Google Map. Our life was going on, right? We all adapted to that. Today, you can't think of your life without WhatsApp, without Google Map and all those things, right? So point I'm trying to tell you is that everybody will adapt to new ways of doing things, right? In that process, again, another analogy I give you is in our capital markets in 97 or whatever, 95, when dematerialization happened, there was a strike in Bombay Stock Exchange that lots of people will lose job. People who are handling the share certificates physically and this and that, right, will lose jobs. Fast forward, SEBI went ahead, did dematerialization, made technology as a base. Capital markets, because of that automation, has probably created 2,000 times more job than it had that point in time. The point I'm trying to make is that technology always makes life easier, expands market, it makes your life, like I said, Google Map has made your life easier. We were living before also.
Yeah.
So point is, technology is an enabler to make your life easier. We all adapt to it. Of course, some people who are handling share certificate will lose job. If they can't adapt, there are lots of benefits to take care of them, but the new generation will adapt. New generation will benefit from that. So companies adapt very fast. So I think everybody will adapt, in my opinion. Now, people who don't adapt, they will anyway die, and they have always died. They have always suffered. I mean, we have seen whether it is companies or individuals who don't refuse to adapt, they will suffer from that. So I think it's a lot more fear than realities. Of course, you should be mindful how my business will get changed. Every company should think about it, but not from a fear perspective, but from a understanding and how it can change. In our industry, I think a lot of technology has been used. Whether it is screeners, creating, crushing data, using algorithm. It's been going on for a very long time, by the way.
That's true. That's true.
Now, how in AI also there are layers. Gen AI, kahan pe jayega? There are, so I think, in my opinion, there's a lot more fear than I think reality. We will change. We will benefit. Human life will become far more easier. Of course, it can go down. There are theories, I'm not expert, that it can go all the way to take control of humans also.
Yeah.
But who knows that?
Who knows?
That I can't get there because I don't understand the full implications of that. But we will live with the future as it has always adapted.
As it is always adapted, yeah. Though, because I must say, this year, for example, a lot of fear around Indian IT, right, Vikas, and what could happen to job loss or job prospects there, will they lose jobs, etc. If you walk down, and I refer to the WEF because a lot of global companies come there, the promenade was dominated by Indian companies. And from a Infosys to a Wipro to an HCL Tech, everybody was advertising this, that yes, AI is the buzzword. If you know how to use AI well for your organization, please come to us because we will help you do that. So I think it ties in with the point that you were earlier making, that lifting kaun karega? AI बेच तो देगा, but बाद में lifting kaun karega? So Indian IT might do it. Interesting. Last couple of questions, Vikas. One is because a lot of people, one is on selection process methodology, especially during tough times, right? So let's assume कि मैं आपको example दे रहा हूँ कि you are a person who is not having an annual customer inflow of capital coming in every month or whatever. Your fund आपका खुला नहीं है, आप individual investor हो, right? You've seen your portfolio get eroded by 20, 30, 40, 50% as the case may be in the month of February, peak February I'm talking about, right? How do you then think about what to do in the market at that point of time? Because trading करने के लिए finger उठती नहीं है, the mind is scared, right? Portfolios have bled and therefore you can't sell in order to invest somewhere else. So what would a Vikas Khemani do in such a scenario, the mental model?
I think first of all, manage your mental situation. Don't let it impact your judgment. Very often, I think when you see this kind of fall, people lose balance, people lose the objectivity, and they'll start, blaming everything what is not getting right, and I've seen these days everybody calling out for long-term tech application should be tax zero and all those things kind of advice, and those kind of things starts happening. In my opinion, make some government, blame some government, blame some corporates and all. I mean, this is in my opinion. So control your mind. Don't. I think if you made bad decision, correct it. Even if it is a loss, get into a good decision, right? But if you think you made a good decision, business is doing well, companies are doing well, stay put. If you have more money, average it out. I can tell you, I have had many companies in the last 20 years in my career which are 20 bagger to 100 baggers, and each of them have seen between 30 to 50% correction many time over, not once. But if you, in any of those many time over 30 to 50% correction, you buckled in, then you will lose the entire big upside. So the key thing is that, do you know your investment well? Have you bought it on tips, or do you know it with research? Do you know your company well? Do you know your investment well? If you know your company management investment well, your ability to stay put through thick and thin will be very high. And that is where I think job of a research, job of a qualified investment comes into. Unfortunately, a lot of retail people end up buying on tips, buying on news flows and all those things, and they are the ones who suffer the most. Unfortunately, sad realities of life is this, because of again many influencers to a lot of people. There are all kinds of people in the market. Unfortunate reality is that people suffer from that. So I would always say that know what you're doing well. If you know what you're doing well, your ability to stay put through thick and thin is very well. And actually investing is this. Real successful outcome in investing comes in your ability to stay put through thick and thin, because there will be bad periods. There will be bad in market. There will be bad periods. Reason could be anything. I don't know any cycle. Like I said, 22 we had, 20 we had. I've been all around bullish. But you will. So if you are bullish for 10 years, there will be at least 4 or 5 periods where you will have 20 to 40% correction. Now, if you don't live through that, you will go back to cash or you will do something. So that's the only advice I can give.
Okay, great. Okay, Vikas, lovely talking to you. It's one of the best conversations that I've had with you. Really enjoyed it. Thank you so much for
Pleasure
joining
is
us on the
mine.
podcast.
Always love doing that.
Yeah. And viewers, thanks for tuning in to Talking Point Unfiltered.